much. Well, with us this morning as stock trading gets underway is fund manager Damon Vickers. His fund at 9 Points Capital was up an eye-popping 63% last year. Damon, always glad to talk to you. Now, you made money last year from being short. So right now, are you short or long?
We're short. We got short about a week or so ago. We increased our short exposure on Friday and Monday. And it really looks, Betty, that the rally that we've had since, I guess it's, March, is kind of coming to an end.
All right. Well, Damon, just to pick up on your point there, I mean, the S&P 500 is basically unchanged year to date. So how aggressive can those short positions be?
We'll see. I mean, really, we like trending markets. We're a trend-following fund, and we don't really care whether the market goes up or down. We've had a bit of choppy action this year. That's a great point. The first quarter we went down. We shorted into that. Then we had to cover because the market started going up. Then we started going long, and the longs started caving in on themselves. So there really wasn't a lot of leadership there. No, I think we're starting to get more aggressively short, and we are short the market.
How low can the S&P 500 go before the end of the year?
That's I don't know anybody that has the answer to that. I don't have the answer to that. I mean, how low could the question is, how low could it go? It could go down to the lows, and assumedly it could take out the lows. You could invert the whole move.
Damon, it's Betty here. You were talking a bit about the longs that you had. I mean, did you make any money on your longs this year or what?
Not a lot, no. I mean, it's really, we're breakout oriented. So you're looking for leadership in the market. You're looking for stocks or markets that are going to break out and that trend is going to carry forward.
But Damon, how could you not have made any money on longs when the market rallied like 30%?
Well, I would have had to have come into the year with a garbage portfolio of beaten down, battered stocks and had a portfolio loaded up with Citigroup and AIG and just all the trash all over the floor. And then certainly if I had held that into the first quarter, as most investors piled into the beaten down, battered, and stuff that was left in the wreckage, I would have had a performance of that garbage. We have not had any real leadership in the stock market, and the best performing stocks year to date were the stocks that were the most beaten up, battered, and the fundamental picture really hasn't changed in those.
Damon,
and I'm not a bottom fisher, and I'm not going to load up on Citigroup at $1.
Yeah, Damon, though you're saying that it's sort of the trash picks, but if you look at the groups that have outperformed this year, it's infotech, materials, and consumer discretionary. None of these are financials.
Well, I think there's certainly hope, myself included, that we could begin to have new leadership in the economy, and the technology would do that. And I think that's why the NASDAQ has been performing. But there really aren't a lot of issues in the NASDAQ that are really investment grade, in my opinion. I don't find Dell or Cisco or Microsoft or any of those ideas really that compelling.
We only have 30 seconds left. Number one best investment idea.
I would sell the market. You've had a good rally, and I would use any strength to lighten up on positions that the 40% rally is giving you.
We thank you for your time, Damon. Damon Vickers of 9 Points Capital.